In this part of Money Mind, we want to discuss business opportunities and what steps companies can take to capitalize on what the Regional Comprehensive Economic Partnership or RCEP agreement will bring. Now, the agreement signed in November last year will broaden and deepen ASEAN's engagement with Australia, China, Japan, Korea, and New Zealand.
And don't downplay the value of this agreement because RCEP participating countries account for about 30% of the global GDP and 30% of the world population. Here's what you can expect: mutually beneficial economic partnerships that will facilitate the expansion of regional trade and investment and contribute to global economic growth and development, plus market and employment opportunities to businesses and people in the region.
Given the impending operationalization of the agreement this year, how can businesses ready themselves to catch the wind in their sails? Well, time now to speak with Lennard Yong, who is CEO of Tricor Group, Asia's leading business expansion specialist, and with global knowledge and local expertise in business, corporate, investor, human resources and payroll, and corporate trust and debt services. Lennard, thank you for joining us.
Thank you very much. Thank you for the opportunity to speak with your audience today.
Now, Lennard, remind us again the economic significance of the RCEP agreement and to what extent it differs from existing FTA instruments in the region.
Sure. So I like to call it RCEP as trade plus with benefits. So let me put it in the context. Your introduction was really concise. If you look at the U.S. Mexico-Canada trade agreement, that encapsulates about 500 million people and around $24 trillion US. And you put that against the EU, that's about 440 million people and about 15 trillion US. But RCEP, which encapsulates the ASEAN nations and especially Japan, China, and Korea, Australia, and New Zealand, the five main trading partners, you get a situation where you got 2.3 billion people and over 25 trillion. So this makes it fundamentally compelling. It's bigger, it's larger than any trade agreement in the last 5 years.
Now, your company, Tricor, recently released its 2021 Asia-Pacific Trade Report on RCEP, this RCEP agreement. What is the main focus of this report and the key focus areas it highlights?
So a trade agreement is essentially a bilateral transaction, rules of engagement between two countries. And I think where you want to get to in this conversation is what's actually different from the RCEP than what we previously had. And there were lots of trade agreements among ASEAN with some of these major trading partners. So here are some of the highlights. You have this opportunity where an entire ecosystem of 15 nations are brought together under a trade agreement. And by doing so, it creates opportunities to bring together the global supply chain within these 15 nations. So effectively, what it does is that it allows you to have some common rules around product-specific rules around tariffs. It allows you to have some rules around how you trade and the ease and efficiency of the documentation which facilitates global trade. Now, that in itself is new and different because in the past you would have one-to-one kinds of agreement. But today, all 15 nations are working together to try and get to a common base. And earlier on, I said, look, there was a plus. Why is that? So there were, in addition to trade, there were a few things that were critical to today's digital economy. The first one is electronic commerce. There was a clear signaling from the economies to put together some rules of engagement around e-commerce. Number two, there was also articulation of rules of engagement around intellectual property and trademarks. And number three were around further liberalization, increase of ownership around investment in services. And if you look at GDP today, not just about manufacturing, but we do have, as we enter into the digital age, more and more services. Now, there are a lot more in the trade documents. I won't go through all of them. But in essence, these were the three things that is what I call a plus to the RCEP core fundamental FTAs among those economies.
Sure. Yeah, the provisions of the RCEP agreement definitely is quite lengthy, and in fact, we'll tell our listeners how they could download that report later on our program. But coming back to the RCEP agreement, broadly speaking, Leonard, how would that provide new opportunities to Singapore businesses, and in what form?
Well, before I go into Singapore business, I think one has to understand some of the basic fundamentals. So let me boil it down to really simple terms. So when you look at the trading of goods, there's probably an opportunity for about 92% of the goods to have close to free tariffs over the next 20 years as RCEP comes into play. And fundamental to that is rules around origin. Now, what does that mean? So today, if you catch a fish in Malaysia and you export it to Singapore, that's an easy one. It's a whole fish from one country to the other. But what happens when the fish becomes a can of tuna, and then there's a value add that occurs there? So what this does is the rules of origin enable the countries to have a common language to still qualify, where possible, the essence of the products as being made within the ASEAN countries, and so therefore exported in a tariff-free environment. So I'll give you another example. You may get a pizza dough, and it's made of it's made of flour, and it's made of oil. And the flour may come from Europe, and the oil as well. But when it's processed and it's baked and so on, and it's shipped around, so that's how you utilize the free trade agreement to identify how much has changed or how much value add has been created, and then qualify that as a product made within an ASEAN country. So with that backdrop in mind, one of the key things in Singapore is, if you look at the way the Singapore economy has been structured and set up, it's in a very advantageous position to really warehouse a lot of the brains and the center of the key decision making for the rest of the ASEAN operation. So often we see, even in our business, businesses will set up a structure, a holdco in Singapore, and then with satellite operations, in Vietnam, in Indonesia. And Singapore has the breadth of talent. You've got the rules of engagement in terms of the legal, the banking environment, and so on to facilitate this. So Singapore is physically a small nation, so it doesn't do a lot of these widespread manufacturing, but I think it's very well positioned because of the high talent, the skilled labor force, and a very stable operating environment to really warehouse a lot of the holdcos, the regional cos in these decision making. So I'm excited, and we at Tricor are looking to double down our investments as well into our business in Singapore, trying to help more businesses around the world, especially in Asia, enter into ASEAN via Singapore.
Do you think certain markets have more to gain from RCEP than others?
I'm excited because I think all the markets have something to gain out of it. And if you look at the competitive advantage of different nations and so on, there are going to be certain talents and competencies around the region. So if you look at our friends in Thailand, there's a tremendous auto manufacturing economy there. If you go into Vietnam, we have brought in over 25 solar companies into Vietnam, and Vietnam has an emerging agricultural industry as well. So there are different capabilities in different. So I would say that it's not going to be a zero-sum game, but I think businesses are going to find where they can get the best talent, the best operating environment that fits their line of business or operations. And I think Singapore is very nicely positioned because you can warehouse a lot of these regional centers through Singapore.
We are hearing from Lennard Yong, who is CEO of Tricor Group, Asia's leading business expansion specialist. And we're finding out more about how businesses can look at capitalizing on the Regional Comprehensive Economic Partnership Agreement that was inked in November last year, but it will be set into motion this year. Any idea as to when exactly that might happen, Leonard?
Look, a lot of these things need to be ratified within the country, and what we expect is that you'll start to see a lot more development towards the latter part of 21 and early 22. And what's exciting about this is that 18 months after they've already established this, there will be opportunities for countries that didn't make it in the first round to be able to participate, and hopefully major economies like India would consider coming into this agreement here. So my sense is that, let's look forward to about 12 to 18 months, but the opportunities here will be a multi-decade opportunity. So folks, I think even if it's late by 6 months, it doesn't really matter because you want to get the rules of engagement right. Let me just tease you with one particular item. Singapore is very advanced in the digital economy. You have very simple things such as electronic signatures. But what this trade agreement does is that it transposes some of the good work being done in Singapore into the rest of the economies in RCEP. In fact, the trade agreement articulates that electronic signatures, paperless transactions, online consumer protection are also some of the longer-term goals which it wants to develop within the signing economies, the 15 economies in there. So I think it's going to be really exciting in the next 10, 15 years.
Well, as you mentioned, New Delhi, or rather India, chose not to be part of the RCEP. Neither did the U.S. under President Donald Trump. But can we expect the U.S. under a Biden administration to come on board? And what would be the positive result of that?
Look, I think in general terms, global trade is always better when you got more people participating. And really it depends on each individual nations and their choices and so on. So I'm more of a commentator of global trade, and for some of the decisions of different countries, that often is more of a political choice of what they want and what they choose. So I'm hoping as a business that we see more participants globally, but I'm excited right now in terms of what we have. If we get this right, 2.3 billion, 25 trillion US dollars, today we'll have a common language and a fresh breath of air, which is vastly needed, especially as we're coming out of very difficult times of COVID-19's problems in 2020.
Yeah, talking about COVID-19 as well, do you think that this is actually a very timely agreement where the execution is concerned during a pandemic? Economies are trying to jumpstart their economies amid vaccine rollouts as well, and this is definitely another shot in the arm, a positive one.
Absolutely. I think, if you look at the trade figures from 2020, we saw that global FDI around the world fell by 42%, down to 859 billion US. So this is the flow of global trade. The data comes from the UN Conference for Trade and Development, so UNCTAD. And across ASEAN, Singapore experienced a 37% drop in FDI to 107 billion, Malaysia minus 68%, Thailand was minus 50%, and the one notable ASEAN that improved was Philippines of 21%. So coming out of 2020, FDIs globally have dropped. FDIs in ASEAN as well is down. And what we need absolutely is a kicker like RCEP to really get things going. And what it does now is that RCEP is so important because it recognizes today that things are no longer made in one specific country, but there is a value-add process in the supply chain. And what it does is that for those corporations that are astute and they can get the right advice, get the right information to position themselves to take advantage of a retooling of the global supply chain in a tariff-free kind of environment. So there is a huge amount of opportunity, and I'm excited for the next generation because this is going to be big for especially ASEAN and the Big Five nations.
Now, RCEP has yet to be entered into force. And do you think there might be some challenges ahead with the execution of this agreement? And do you think one of the possible factors could be the trust deficit with China, considering its aggressive postures on territorial disputes over the South China Sea, for example. What are your thoughts?
I'm an expert in doing business, and we help businesses expand regionally and globally. So I think these things are of a different issue, and really it depends on governments to resolve them. They're above my pay grade to be able to figure these things out. But what I'm excited is really, I think, helping companies to understand the new rules of engagement, helping them to expand their businesses across the region. That's what I'm excited about. And I would say that, in terms of China, one of the biggest opportunities that has come out over the last 12 months is that the foreign direct investments in China is actually only slightly down by 4%. Now, I mentioned that global FDI was down 42. But here's another fact that you may not know. China's outbound investments are actually up 3.3% to 133 billion US. Now, that means China is one of the biggest exporters of investments. And here at Tricor, we assist over 1,500 corporations from China to come out from China into Hong Kong, into Singapore, the rest of Asia. So in that sense, I'm excited because global business, is more focused in getting the job done and building the global economy.
And for our listeners, if you'd like to download Tricor's 2021 Asia-Pacific Trade Report on the Regional Comprehensive Economic Partnership or RCEP Agreement and COVID-19 recovery, do visit their website at tricorglobal.com, spelled TRICOR global.com, and click on the pop-up box to download the report. We have been speaking with Tricor Group's CEO, Lennard Yong, joining us for this conversation on Money Mind. Thank you, Lennard, for your time.